Getting right to the goldsilver.com main page, I'm going to skip the prices of the gold and silver IOUs, and I'll tell you why I call them IOUs later on in the video. I want to focus on all of the stories on the main page because everything on here today is very worth reading. Fed's balance sheet, the other exponential curve. The Fed will soon monetize the entire fiscal stimulus package. Global debt jubilee. No V-shaped recovery is coming. Why the Fed will nationalize everything. U.S. consumer prices post largest drop in 5 years. Deflationary. Another U.S.-wide housing slump is coming. Deflationary. Ray Dalio predicts a coronavirus depression. Deflationary. Robert Shiller, pandemic of fear could tip the economy into a depression. Watch episodes 6 and 7 of Hidden Secrets of Money, especially episode 7. It's all about the psychology of the markets and how psychology controls velocity of currency, which controls prices in the short term. These are all very good to read, but I want to focus on no V-shaped recovery is coming and why the Fed will nationalize everything. And this article has some quotes from Bank of America economist. And in the article, the Bank of America says economies will reopen to a greatly diminished demand environment with high savings rates and very low discretionary spending. Again, if you haven't watched episode 7 of Hidden Secrets of Money, here it is. High saving rates slowing the velocity of currency and very low discretionary spending, meaning it'll be very hard for it to get going again, for the economy to come out of its dip. This argues for a U-shaped recovery, so a long, persistent bottom and a persistent large output gap in our view. So instead of a V-shaped recovery, the administration and a lot of pundits are saying, this is going to be horrible in the short term, but it'll bottom and then we'll bounce right out of this and it'll be this great economy again. It'll be this great recovery. Baloney. This is going to last, it would probably last for a couple of years if the Fed would just stay out of it. But what's going to happen is the Fed's going to get into it and it's going to last for decades. The next potential step, in our view, is to take a page out of the Bank of Japan's playbook and implement yield curve control. First of all, Bank of Japan has proven that Keynesian economics does not work, and things like, central control of an economy has always been deadly. It just does not work. And Bank of America is saying here that they should implement yield curve control. What is the yield curve? First of all, the yield is the yield on bonds. And to manipulate the yield on bonds, you either have to buy or sell them, changing the price on bonds. When the Fed buys a bunch of them, the price goes up and the yield goes down. If the Fed sells a bunch of them, the price goes down and the yield goes up. And the yield curve is the interest rate that you're getting paid on the various maturities of bonds. There's like a 3-month and a 1 year and a 2 year, 5 year, 7 year, 10 year, 20 year, 30 year. And it's supposed to get higher and higher. The interest rate is supposed to go higher and higher the further out in the future, the longer the maturity of this bond. If you're loaning your currency to the central bank for 30 years, you should get paid more for them borrowing your currency because of the risk that you're taking. So that's the yield curve. When they influence this yield curve, it upsets a whole bunch of things because the yield curve is one of the few leading indicators of the economy. This is the bond vigilantes, they call them. Bond investors are very sensitive to what they think is going to happen in the future because they're loaning their currency for long periods of time to the government. If suddenly the 3-month Treasury goes up much higher than the 10-year Treasury, they're seeing a problem in the economy rather soon, and they're scared to loan their currency for 3 months, and they want more interest for it than they are for 10 years. So they see something happening and then a recovery in the economy. So they're charging more for their currency. If So if the yield curve inverts like that, they see something coming soon in the economy. But this is like a crash warning system in your car. It happens before the accident, before the collision. And the Fed now wants to control this. Now, another thing about yields, if they all go up, then bond investors are expecting inflation. If all of the yields on the different maturities fall, they're expecting deflation. So it can tell us also what's going to happen over the long term in an economy. So it's a very important leading indicator. All of the other indicators that we've got are trailing indicators. And what the Fed wants to do, if they do yield curve control, is control all of that so that they're going to turn this, one of the only leading indicators that we have, into a trailing indicator. So there's nothing looking toward the future anymore. What B of A did not mention is that the yield curve control would terminally crush any forward-looking function of the bond market, which is the earliest warning indicator of inflationary or deflationary forces across the economy, which is the earliest warning indicator that we have, basically. That means that with the yield curve frozen, inflationary imbalances will build up beneath the surface, and there will be no way to either observe them or respond to them, besides asset price hyperinflation and soaring gold prices, of course. It is only a matter of time before the U.S. capital markets get to a point where no economic or fundamental signals are reflected in risk assets. Risk assets, there's two risk assets basically, sovereign bonds, and the best bond is considered the U.S. Treasuries. So sovereign bonds and gold, those are the risk assets. That's really it. And so if they take price discovery away from the bond market and freeze interest rates at some level, there is no signaling of what is going to happen in the future except for the price of gold. And that'll take just a little bit longer, but it's going to come back with a vengeance, resulting in a market with quotes. I'm going to turn those into air quotes, resulting in a market, because it's not a real market anymore, that is, if not nationalized, then centrally planned by the whims of a small group of Fed career economists, most of whom have never held a private sector job and have zero real-world experience. This just drives me crazy. I just hate this, that these people control everything and they have had no real-world experience. How does such ubiquitous central planning end? Look no further than the USSR for the answer. Now, I'd like you to go and watch a video. It's very, very entertaining. You're going to love this series. It's from 1992. It was produced by the BBC, and it's called Pandoras Box. We'll put a link in the description below the video. And the very first episode shows how the Soviet Union was a centrally planned economy, and this was the most scientific experiment. And it was both socially centrally planned and economically centrally planned. But they had thousands and thousands, probably tens of thousands of economists setting the prices of everything, the myriad of prices in the economy, determining what should happen with production numbers and all of the different variables in an economy. And you know how it ended. I mean, it collapsed. It does not work, this central planning. There are perverse unintended consequences, such as you'll see in here. One of the measurements of how well the economy is doing is how much cardboard is being produced. Because if you're producing a lot of cardboard, you must be packaging a lot of items. Another measurement is how many rail miles are happening. So they measure how many miles trains are covering. One of the perverse consequences in this, and it's an entertaining look. You've got to watch this thing. One of the perverse consequences was that there were trainloads of cardboard just going around the country, taking a tour of the country over and over again so that they could have good results for their numbers. This is one of the things that happens when you've got segregated departments of people planning things and making things happen instead of allowing the free market to work. On the radar, I want to thank Bullion Star. They are a retail dealer of precious metals in Singapore, and they are one of the other precious metals dealers that come up with a lot of information about monetary history and what's going on in the world, and a whole bunch of different things with economics. They provide information. COMEX secures secrecy agreement with the Commodities Futures and Trading Commission under the Freedom of Information Act not to release details to the public of its market maker program for the new 400-ounce gold bar futures contract hatched with the London Bullion Market Association, because disclosure would likely cause competitive harm to the COMEX. Program begins tomorrow, April 13th. Well, that's today. Taking a look at a few of these things. The Commodities Exchange, the COMEX, or exchange, hereby notifies. So they're just telling the Commodities Futures and Trading Commission, which controls the COMEX. So this is like a bank customer telling the bank how it's going to be run. They're hereby notifying the Commodities and Futures Trading Commission of plans to implement the Gold Enhanced Delivery Futures Market Maker Program. Enhanced delivery. These things always mean exactly the opposite of what their title is. And so this means no delivery, most likely. Futures Market Maker Program. The proposed program will become effective today. Disclosure would likely cause competitive harm. Who's the competitor on the Commodities Exchange? Well, that would be the London Bullion Market Association, and they're working with them. This is like a joint venture. The other competitors might be Shanghai Exchange and the Hong Kong Exchange, but that's minor competition. The main competitor to COMEX is the LBMA, and this is a joint venture between them, basically. And so it might cause harm to their other competitors, which would be me. It's retail bullion stores that sell real gold and silver that you can buy, because what they're going to sell you is gold and silver that you can't actually take delivery of. That's most likely why this thing exists. Notwithstanding this presumption of confidentiality, the confidential information in Appendix A still would be considered confidential because it is information that COMEX would not have disclosed to the public about. So this is about the trading that you're doing if you're dealing in futures contracts, and this is what sets this fictitious price of gold and silver. It's the price of gold and silver IOUs. And basically, this is most likely some scheme to make it an IOU nothing. And its disclosure would cause substantial harm to the competitive position of COMEX. So the competitive position against whom? Well, probably dealers like me that actually want to sell you physical gold and silver so that you can protect yourself. Appendix A, confidential treatment requested, additional supplemental information redacted. So they've hidden it from the Commodities and Futures Trading Commission, which controls the Commodities Exchange. This is an insane world. Chart of the day. The first quarter performance of the major asset classes, so crude oil, commodities, real estate, the Dow Jones Industrial Average, silver, which means silver is undervalued compared to gold, S&P 500, and it will catch up. In my opinion, I don't give financial advice, but I have bet my life on it. S&P 500, the NASDAQ, and then here you have gold, and the only thing that's outperformed gold is the 10-year Treasury bond, and this is short term. I've said this before. I said that it'll be a two-stage crash, and that in the first stage, bonds will be the short-term beneficiary. And the dollar. And that is exactly what's happening. I want to welcome the 3,513 new subscribers. And just remember, hit that thumbs up button and share these videos on Facebook and Twitter. Thank you very much if you do. Viewer feedback. This is from Friday's video. Should we be bailing out the billionaires? Ken McCormick says bailing out those deemed too big to fail, or now they call them too essential to fail, only creates more malinvestment. The continuation of being reckless, knowing that a safety net is always there. Moreover, these cronies instantly receive their federal credits, while Main Street has to fight for crumbs. Thank you so much. This is so true. But you know what? This is also fraud and theft when they do this. What they're doing is diluting the currency supply to create this new currency that really has no purchasing power in it until it is spent into circulation. And at that very moment, it steals purchasing power from all of the other currency that exists. That's how it gets its purchasing power. It's empty until it enters circulation. Once stolen, that purchasing power is transferred to whoever gets to spend it first. So when they bail out these institutions and stuff, they're stealing wealth from you and I. You're the one paying for it. Not the Fed, not the Treasury, you. On the weekend, we took down a video that we had originally posted in 2014 at the height of QE and put in this video of Helicopter Ben. The video was posted in January of 2014 and it only got 20,000 views, something like that. And it was a great video and it really predicted a lot of what was going to happen in the future. And Diane does she's a composer and musician and lyricist, and she sent this tune to us, and she did a masterful job. And then Dan Rubach, my producer-director, just found all of the right images and made this beautiful video that sort of predicted the future. We took it down because it only had 20,000 views, and those views, when you take them down, you lose them. So it hurts the channel. But then reposted it, and right now it's got over 50,000 views. So I want to thank you very much. If you haven't seen it, go and watch it. And in the link, in the information below the video, in the description, there's a link to Diane's website or Facebook page or whatever, and her video channel, and you can go and watch it and there. And watch some of her other videos, and maybe subscribe to her channel. It would be a nice gift because last week, her birthday was on last weekend. So go and give Diane a birthday gift by giving her some views. Peter Dockrell, he authored a book titled The Courage to Act. Greg Hunter retitled it The Courage to Print. Well, you know what? Printing requires some actual work. If you've ever been in a print house, those guys do work. Typing doesn't take much work at all. And to quote one of the viewers that commented last week sometime, the difference between 1 and 1 trillion is 12 keystrokes. Christy, they're going to make a movie about this era, and it's going to almost seem unbelievable. You know what? Historians will write about this era, and they're going to say, what were they thinking? Because I'm already saying it. It's just totally insane. Heinrich Clausen, thanks. Beautiful voice, great brains, and able to write real lyrics. Subscribed. So I guess he subscribed to her channel. And thank you very much. I suggest everybody else follow that link under the description below. And we'll have a link below this video for the BBC series Pandoras Box. Please go and watch that video, episode 1. Quote of the day. Remember, get my book, it's free. Now, Marx wrote the Communist Manifesto, and there are 10 planks of communism, and the 5th plank of communism is the centralization of credit by means of a national bank with an exclusive monopoly. We went down this road. We made it legal in 1913. And in November of 1914, we went down this road when the Federal Reserve opened its doors for business. Thank you very much for watching. We'll see you next time.